This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Start of a new week. This is a Monday morning, and one hopes that the sentiment with which we closed the market last Friday continues this into this week as well. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And we have so many cues to track, right? Of course, there's Reliance earnings later in the evening. There's HDFC Bank that we have to react to, and a slew of earnings this week. So we pretty much have our hands full.
Well, that's right. And we have expiry as well that will play out. So, plenty of action this week.
Plenty of action, and plenty of action, actually not plenty of action over the weekend, which is good news. You don't want rockets being fired, and we didn't get that, and I think that's what I want to start with, really, and that's what did not happen is what you need to know, and I think that'll be important. So, markets in the US sold off, and I'll get to that in just a bit, on Friday, but there's a sigh of relief this morning. And the sigh of relief is largely on the back of the fact that there has been no geopolitical escalation over the weekend. We were saying this on Friday after the post-market show on Editors Roundtable that most of the escalation actually has happened over the weekend. From the first incident to the second retaliation, to the retaliation, to the retaliation, everything is largely coalesced around the weekend. So nothing happened, and I think that's good. So we are seeing a familiar pattern of markets being supported from the open. What do I mean by that? I mean, if you look at the US equity futures, they're up about 0.3 to 0.5%. It's a slow start, but that's where we're at. You've got Treasury futures. I mean, if you look at the 10-year, for example, the implied open is about 1 to 1.5 odd basis, 2 basis points higher now on the 10-year. I mean, it's, yields in a risk-off kind of environment, yields would be sold, bond prices would go up. It's a reverse right now, which is not exactly a bad thing. Now, of course, I mean, you could go on the other end of things and talk about higher rates, higher for longer. We'll get to all of that in just a bit. But since top of mind, the big concern has been geopolitics, and nothing has happened. I mean, at least at the margin, incrementally, we will take this as a bit of positive. You also had the BBC, which essentially said that the Iranian president's Friday speech did not mention the most recent events. And both sides have kind of climbed down. One side, of course, saying that no damage was caused. The other side not really going all out and saying, well, we did a lot of damage. And indications are that they don't want any escalation. On Friday, and this is, of course, I mean, the reaction to the most latest events, which did not happen. But on Friday, we didn't know this, right? So US market sold off. Nasdaq was down 2%. The S&P was down about 0.9% as well. And this was largely because things were uncertain in terms of how things were looking going into that Saturday. Now, the 10-year is around 4.62%. It's flat. The dollar index is flat at about 106, a little over that. And oil prices are also flat at about 87 or so. So, we've seen a worse kind of combination over the last many days. And this is not the worst thing. Friday, of course, here in India saw a massive rebound from the lows, something which we were talking about. That entire rally was retraced. We had a 1,000-point up move, and then we had a 1,000-point down move. The Nifty touched almost got to 21,700. And then that means that, plus 1,000 became minus 1,000. And from there, we saw this 400-point rally from the day's low, and the Nifty Bank, which saw a 1,000-point move from the day's low. What are the targets now? We're looking at stuff possibly and hopefully on the upside. The immediate target would be 22,276. So you're looking at retracements from the top, retracement of the 1,000-point fall from the absolute high to the low, and this 50% retracement stands at 22,276. That's the immediate number, about 150 odd points away from where we are. It's not going to be very easy in one way. I mean, remember that, because in this region between 22,250 to 22,500, it's also a big gap area, and expect resistances to start to work. But I think eventually we start to look at those numbers on the upside. Targets for the Bank Nifty stand at 48,110. It's a similar retracement for the Nifty Bank as well from the high to the low. The 61.8% stands at 48,110. The Nifty Bank did not do as well on the upside, and it's not fallen as much on the downside as compared to the Nifty. So these are two levels for the Nifty Bank. Actually both for the Nifty Bank and for the Nifty, hopefully we will not break the lows that we saw for the Bank Nifty, that is 46,579. it's an important week for earnings. And I think, actually more than anything else, the US market is looking a little tricky. It's broken it's broken the 55-day moving average on a weekly basis. And in the past, go back the last 2 years, that has given you about a 4-5% kind of a correction. So, but could something change? Earnings could change that. We got, 4 of the sort of magnificent 7 companies which report earnings this week. Overall, 40% of the S&P 500 companies also report. So there is a lot to track. GIFT Nifty will come up on your screen. And it'll give you an indication how we're likely to start 150 points higher. So we'll take it from there, Sonia.
Oh, absolutely. I think it's going to be a really strong start, right? That's what the GIFT Nifty is indicating. And this strong start is predicated on a few things. One, of course, is HDFC Bank's numbers, which didn't have any major negative surprise. The earnings were largely in line with expectations. The margins have actually improved a tad bit quarter on quarter. It was a little bit of a mixed bag as well because, there were some negatives in the numbers as well. But most brokerages are bullish on the numbers post what we saw over the weekend. Goldman Sachs, in fact, has raised their target price on HDFC Bank to 1940 versus 1915 earlier. I think the fact that there is no major negative surprise is something that the street has taken with both hands. You have Reliance's numbers later today. They come out post 7 o'clock in the evening, so we have a long day ahead. The street is expecting a strong performance, especially in the core business because of the way oil prices have moved and stability in the telecom business and retail as well. So that's another big trigger to watch later in the evening. And I'm watching out for mid-cap IT very closely at a time when, results from Infosys, Wipro have been very lackluster. Look at Persistent Systems, right? Overall, for the full year, they've seen a 14.5% growth quarter on quarter and good performance sequentially in Q4 as well. So at a time when larger peers are lagging a bit, Persistent Systems actually doing pretty well. So I'm watching out for that stock. Now, the global markets, this morning Asia is looking good, but the US was not that great. The Nasdaq, in fact, has been down for 6 straight days. But if you look at the flows as well, they've thinned down a bit for our own market. So DJIA has barely sold 50 crores. FI has bought about 129 crores. But it's an important week of earnings. We kickstart with Reliance today. And then we have Axis Bank, Bajaj Finance, HCL Tech through the course of the week. So a lot of numbers coming through. And we're going to analyze it threadbare for you. But the moot point is this, right? The market has been very strong. And the Nifty, in fact, closed above the 22,100 mark on Friday. The Nifty is now up 300 points from the 19th April low that we hit. So we are sort of seeing every dip getting bought in this market. And another big positive, apart from what Prashant spoke about, which is, the cooling off of tensions between Israel and Iran, is the way Brent crude prices have also cooled off. The Brent is now down 3% in the last 1 week. So a lot of positives for our market, and maybe we can build on to that momentum today.
Well, that's right. The volatility is going to pick up in this week itself because, as I mentioned earlier, there's expiry week as well that will play out. So towards the end of the week, second half at least, you'll have quite a bit of volatility. So that's one factor. Besides that, they saw a good recovery in Friday's trading session, but those key resistance levels, they remain elusive. And with the gap up that we're going to be looking at, we're going to be starting pat in those levels. So we'll need to see some follow-through buying from here on. And the third point that I'm looking at is that, in fact, global cues, they're a little bit muddled. So if we're looking at, the big names on the Nifty, HDFC Bank's numbers, well, they were par for the course. But I think the numbers are not something that will drive the stock higher. Maybe that MSCI rejig, whenever we get the outcome out there, that's going to be the key trigger for HDFC Bank. And Reliance Industries, been in fine form, protected technical levels as well, the 2,920-odd level, which we have been mentioning earlier. It's been bouncing off that mark, 2,900-odd. So that's going to be the key trigger to drive us higher from here on. What do the FIs do? Well, after a while, after 4 sessions, they went ahead and they bought index futures. And if you look at it in total number of contracts, well, they added close to 25,000 long contracts, while they added 20,000 short contracts. Keep in mind, they continue to remain net short with close to around 65% of their positions on the short side. In absolute terms, it's still at more than 1 lakh contracts. So the FIs, they're still net short. If you get some glimpse of good news, well, you could see a short covering bounce. And we made this point even on Friday as well. So a net short market is actually a blessing in disguise. Let's look at the options data then. I picked up 2 strikes that have a fair bit of open interest out there. The 22,000 put on the downside, and on the upside, the 22,500 call. And that's going to be really the most important strikes that we'll be looking at for the next few sessions. And just plugging in the numbers, going by the options data, the sense you get is 22,300 to 22,500. That's the important resistance mark that I'm looking at. I'll validate that. I'll say because the DMA comes in closer to this 22,300 odd mark, and the options data suggesting that 22,530 becomes a crucial mark. On the downside, well, we protected the 100 DMA, so that's going to be an important resistance level, a support level. And even in Friday's trading session, you did see that low. So, that's the crucial zone you're looking at on the downside. What about the Nifty Bank, the largest component in there, right? The 20 DMA, well, that's the important mark where we ended in Friday's trading session. And that's the reference zone on the downside. Stocks that I'm looking at besides the larger names, well, a few technical factors playing out there towards the end of the series. Some of these stocks have come out of the F&O ban, so expect some bit of action on these stocks as well. I'll keep an eye out on GNFC, Hindustan Copper, as well as Nalco. So the start in the green, need to build down from there and break those resistance levels. Guys.
All right, Nigel, thanks a lot for that. So it's promising to be a good day for the equity markets. Let's see which way it goes. We have so many cues to track. First up, we begin the day with a comment from Chetan Seth of Nomura, who says that after the hot March US CPI print, they have been warning of near-term risks for Asia ex-Japan stocks from the triple threat of sticky US inflation, high oil prices and a stronger US dollar. However, he says on a multi-month view, they remain modestly constructive on Asia ex-Japan stocks, still expecting a resilient US economy, a strong Asian earnings recovery in 2024 and a modest cyclical recovery in China.
Okay, well, let's get you some money market views now. B. Prasanna of ICICI Bank says that the dollar maintained dominance driven by heightened geopolitical risk and hawkish commentaries by Fed members after a spate of strong data. He says currency market volatility has increased, especially against Asian and emerging market currencies, which have weakened or recovered depending on the geopolitical chatter. He says the rupee is strongly supported by the RBI intervention and is expected to remain in the range of between 83.25 to 83.75 to the dollar in the coming week.
All right, and on the bonds, V. Prasanna says the bond yields across the globe continued higher with intermittent retracements owing to risk-off sentiment emanating from geopolitical risks. He says crude oil is also consolidating at higher levels and local bond yields rose in sync despite lower supply as the repo rate cut expectations are getting fully priced out this year. He expects cautious momentum to prevail with the 10-year benchmark bond yield likely to trade in a range of 7.15 to 7.25%.